are in listen-only mode.
Hello everyone and welcome to another FxEdge Power Hour. I am Marcello Ducille. Today is January 30th, 2013, and I'm going to do today what I've done for years, which is an analysis of the markets and evaluation of our strategies, which are based upon the 5 p.m. Eastern Standard Time close of our daily bars and our 4-hour bars. Thereafter, we will have a brief questions and answers session, so let's go ahead and get started here. Okay, so quite a bit of movement here on the euro, on basically all the currency pairs. A lot of what we said yesterday did come to pass. We drew these areas of support and resistance here. This 14200 really did hold reversal on the pound yen, but I'm getting ahead of myself. So we're going to start with the euro dollar STP, and then we're going to make our way, forward from there. So let's kind of look for areas of support and resistance on this euro dollar that we should be concerned about. We were actually at a very strong area of support and resistance at the high there at 1.3500. You can see here that we have a new high, and that new high is 1.3585, so we're almost hitting 13600. We talked about it for a long time, and I was actually very bullish on this euro dollar and its ability to get to 14000 or 13850, 13950 in that area. And, that looks like a real possibility here from where we're starting. Of course, you can never know what the market's going to do until it does it. You can see down here we have this head and shoulders pattern, and really just price continues to move to the upside. So we'll wait and see where price goes from here and what it does. But our most urgent concern here is to figure out what our areas of support and resistance will be. And you can see here that we've got to go far back to get to an area of support or resistance that we can actually use, going forward here. So this area is taking us way back into 2011, just so that we can get some idea of what the market wants to do here as far as support is concerned. So that's exactly what I'm going to do. Or resistance is concerned. I'm going to go back and find these areas of resistance here, support and resistance. $35.60 was clearly a very strong area. Oops. See what that is. 38.50. And there's a narrow band right here below. I'm actually going to recolor this one so we can see it more clearly. We've got a lot of lines here. I'm going to have to split up these charts somehow, though, because they're getting too busy. But they are necessary. I find that price does remember. The market does not forget. Just using gold. That's not going to work here. Let's use a purple. See it a little bit differently. 3640, 3650-ish. See if we have confirmation of that level. I think 3850 is a much stronger area level. from what I can tell. Yep, there it goes. All right. So 3650 is it's looking good. You got to go back in 2010 to really see where that could be an area that we have to be concerned with to see what the market does with that. If it's going to bounce off our current levels, which is 3600, it's going to come back to 3650, and you know, when it surpasses this high, we could see some price action at 3650. You know, basically that we're at the 3600 area right now. We've got to consider that as an area of resistance here, because price did go to 35.85, and so essentially this narrow, I don't want to create a narrow band here for it because it's already, there's a lot of congestion here on this chart, but that 3600 area is also very important. So what we're going to do is I'm going to use the same chart. I'm going to use the same chart here, or the same same chart, same horizontal line. Move this down to the 3600. That's going to be our area, and also we do kind of need one at the 30. Actually, we need one at 3650 for another area of support and resistance. And of course, right above that, there's a fib area from a previous move, which is right at 3700. So honestly, the 3600, 3650, 3700 are going to be key points, and you're going to watch for price action in those vicinities. That's where we're at right now. 3600 obviously is where we've been. We've gotten very close to it. You know, we'll see what happens if price wants to come down off of that and head back down, so it can actually, you know, touch this 50 MA perhaps. But right now we continue with an uptrend, and we'll just have to see what the market gives us from here on out. Now, yesterday, this euro dollar was actually very, very clear. It's much clearer. And if you look at my analysis yesterday, we were really right on as far as that's concerned, except for, you know, I expected for there to be a pullback in the market. There wasn't very much of a pullback yesterday. It pulled back. The low was 134.80. I was expecting 134.50-ish. So if I had gotten 134.60, 134.65 in that vicinity, I would have that would have been a very righteous entry based upon my analysis. Nevertheless, we believed that price was going to move up, and boy, did it ever. We did get a big move to the upside, and that's shown by our euro dollar here. So we have a change from red to green, gave us a buy signal on the STP. We jumped in at 133.75, as you can see here, and we rolled it up. We're up 200 pips right now on that trade. You can see the entry right here. You can see that where price is right here. So that's a good place for us to be. The euro yen, I'll get to that in a second. Getting ahead of myself here. Okay, so looking at the dollar Swiss here, after doing my analysis of the euro dollar, you know, they have a correlation here, and so what we should be doing is, because this dollar Swiss is actually a lot clearer as far as support resistance levels than the euro dollar is at this particular point, because we still have very close levels to look at. And you can see here that we bounced off of a key area already on the dollar Swiss. So we could see some form of a retracement in this area, so we're going to keep our eyes peeled for that retracement, or for some form of a rejection of price below that, because this is a very strong area, and we're going to look for it on the dollar Swiss. And then below that area, 90-100. There we go. Below that area, we've got one at 9,000, and we're going to have one right below that at about 89.30. Yep, and that does follow suit, 2011. And below that be 87.75 roughly, and below that will be 8,600. You can see that here. Very good. We got to go back in 2011 to see those levels, and you can see, even as I go back to April, this 8,600 shows itself to be a very strong area. You can see it here as well. And there we have it. All right, so below this 9088, in other words, we're looking for 9000, 0.9000. Below that would be 8935 to 8950. And below that would be 8775. And below that, 8600. If we do get there, but those are our areas to watch for. All right, so the dollar Swiss, guys. Essentially, I called for a discretionary trade here because our STP was just slightly too high for us to get in. So we had a change from green to red. Would have gotten us into this trade. And I'm trying to make this a little bit bigger. All right, so there were two reversal candles here, 1, 2, followed by move down, and we had a trend line here. So basically, we had an 80 pip take profit that we're looking for in the first position initially, and you can see as price went across that our take profit could actually expand here, which rarely happens, and because usually it's a consolidation when you look at the other side of a trend line. But this was obviously a negative force trend line. This was a trend line that held price down. It was a resistance trend line. So that gave us a lot more room, and it opened up. And so when it did hit, it hit at 92.05. And you can see here how this particular trade just opened right up. Nice trade, 220 pips. And once again, I'd like to say that honestly, in this trade, we didn't even have 80 pips of risk. It was 65, I believe, pips of risk that we had on this trade. And then we took it all the way down. You can always watch the videos. Like I said before, we would have started looking for this on January 21st, January 22nd. Which would have been Monday or Tuesday of last week. And I would have called these trades all week. Okay, so that's the dollar Swiss. The pound dollar was another one. We had a sell trade on the pound dollar. Changed from green to red, give us a sell. Okay, 78 pips of risk here, 31 pips against us. That was a maximum adverse excursion. You can see price continues to move down for a maximum favorable excursion of 333 pips. Now, I did mention a couple of things. I said that we could see a retest of this level at the 5,700 or this trend line here, and that's precisely what we saw. There's an intersection between the 5,750 and this trend line, and we were looking for some interaction there. You can see price got down to 57.25, so it broke it by 25 pips, and then it turned reversed and went to the upside. So that is that's what happened on this pound dollar. Actually, let's take a look at it on the lower time frame. Perhaps we can see more price action there to identify what I'm talking about here. And here you have it. So this is our trend line that we saw in the upper time frame. Okay, and you can see here that price essentially just played around on it. Here was the beginning of the session, I believe. Here it goes. This is the beginning of the session. You can see price dropped, came back up, nice railroad tracks formation, and then price moves up from there to its current position. So we had a buy bias on the pound dollar. Price had a maximum adverse excursion of about 25 pips, or 40 pips here. Maximum favorable excursion of 51 pips. Currently sitting in the market with 39 pips if you were to take that trade. But the real move is the STP. The STP sell here, giving you an entry right here. All right, pound yen. Pound yen gave us a change from red to green, and you know what I said is that once we had this reversal candle form, that we were going to be looking. You know, there's a very strong probability that price was going to continue to move up because it was a reversal candle that was formed right on a key area, which is the 140-200 area, and that's principally what happened here. Now we got into a pound yen buy here. And the pound yen buy did not actually do anything because price movement was so volatile that it moved up to half to close us out at 50%. So we went to break even at 50%. Then it came down and closed us out at break even, and then it made its move back up. And it wasn't a lot. It was about 100 pips. So there wasn't a lot to get out of the market there, but it was it was a good move. It was exactly what we thought it would be as far as directionally and in some ways to the level of volatility, because the next thing to watch for was that next area. We talked about the first area being really at the 14400 area, and then after that the 14500 area would be our next area of resistance to look for, and we did stop at 144.15. That was the high of the day, and price is currently sitting at 143.86. Okay, and that's the pound yen. So basically, guys, keep in mind that there was a range here. 14400 is at that range as well. We could see price pop up to 14500. Watch what it does at this area, because that's where our last swing high was, if you will, which is at 144.77. Okay, and then we could potentially see, you know, more of this range, unless the market really wants to pull away. Then we're going to see a break out of this level at 14400 or 14500 and a continuation to the upside. But you know, the pound yen, that particular STP did actually pretty well. And what I like about it was that there was a confluence of events here, meaning that reversal candle bouncing off a nice area of resistance. It gave us a lot to work with. Okay, moving right along. Aussie dollar. Now the Aussie dollar, honestly, you know, we talked about this yesterday. So we have a Aussie dollar. I told you that the bias, once we had this doji here, was a buy. We could see it go to the 200. That's precisely what it did. It went to the 50 EMA. Sorry, bounced off the 200, went to the 50 to the 50 EMA, and really just stopped there. It had two choices here. This is what we call a point of decision. The market has a decision to make here, and we're looking for some form of major action at these points of decision. So here you can see that the market had a decision to make. Do we continue to move forward, or do we retrace? You know, what are we going to do? And obviously it shows a retrace here. It's sitting right between these 2 points, the 200 EMA and also the 50 EMA as well. Okay, so you know, basically adverse movement. We had nice big movement on the euro dollar, pound dollar, you know, euro yen, pound yen, everything else but this Aussie dollar. It just pretty much has a mind of its own. And you can see here that it is definitely moving between those two areas for the time being. Okay, moving right along. Euro yen. The euro yen, we have a change from red to green, gets us into a buy right here. And you can see that buy that we took. We got in a little bit late, took it manually. 120.76 would have been the entry. Price goes up 340 pips, and we're currently in with 300. We should be in with 300. It looks like we should be in with 300 pips. Let's see here. Okay, 258 pips is where we're at right now, and you can see price action there. Moving along here, we're moved to break even, and that's where you should be on this trade if you took it discretionarily with us. The change from red to green got us into a buy trade, and that was the that's what all she wrote. So euro dollar is currently up 193 pips. The dollar Swiss is currently up very nicely on a discretionary trade. If you took that, pound dollar is currently up as well, almost 300 pips there. Pound yen on a sell. Pound yen close out at break even on a buy trade that we had. Aussie dollar currently flat in the market. Euro yen, we have a trade that's currently up 256 pips if you got into that euro yen, and that's pretty much it. That's a whole shebang. Okay, so let's take a look at some other things. We talked about a breakout. I told you about this flag. We talked about it before it happened. It broke out to the upside. That's where we're at right now. So that is that. That is very straightforward and very simple. We discussed it yesterday as well. Now, here's another thing, is that we have the Quattro. Quattro was running here. Change from red to green on the Quattro, get into a buy. 270 pips of risk here, or sorry, 270 pips as far as a maximum favorable excursion. That's what we had. If we had maxed it out and gotten out at the highest position, that's where we'd be. We're currently up at 250 pips on this euro dollar quattro trade. There was also another entry here, changed from red to green again. Gives us another entry, beautiful entry. At looking for 27 pips. On the second position, up 75 pips, maximum favorable excursion about 100 pips. So either one of those trades does very, very well. And if you got in on either one of them, you're very happy. Okay, especially because a 10-to-1 ratio, I believe, on the euro dollar. So let's take a look at that again. Maximum, where it's currently at in the market, about 8-to-1. A little less than 8-to-1. So if you risked 90, if you had 90% trend percent at about a 2.5% position, then you could really be walking away from the table with a lot of money, considerably. It's about 16% return on a 2.5% position, or a little bit more than that. All right, so that is our FxEdge Quattro, and here you can see we had a nice breakout on the IBO. I can't say enough about that IBO, but it's been a long time trade, works very, very well. There are not a lot of people who are on it right now, okay, so they're not breaking the trade. So for those people who have it or want to use it, that's a good trade. Look at this. So price moves up, breaks out to the upside, gives us a first take profit. We're looking for 44 pips. We hit the first take profit. Price moves to break even, and we actually get, I think we get stopped out in here. 2, 4, 6, 8, 10, 12, yes. Got stopped out here at 32 pips. All right, so the next move for us here is this little one right here. Okay, so we could have gotten in at the low of 134.77.8 or high of 134.96. And so basically price breaks out to the upside, 15 pip stop loss. That's it. Hits our first take profit, price continues to move forward. 90 pips, currently up 90 pips. And we're currently in the market at 66 pips. So that's a 4-to-1 ratio already. So you had a 2.5% position. You're clearly up about 8% or so on this trade using 90% trend percent. Okay, with Japan determined to lower yen, would euro yen be more difficult to decipher this year? I don't think so. At this point, it doesn't look like it's much of a concern. You can see the euro yen continues to rise. I just think that we need to release our controls off of it so it can just do whatever it wants to do. I think that's where our issue is here, because we should have been in the euro yen trade on our other side as well. All right, moving right along. All right, so there was a trade on the ATR. And there's our sniper. Looks like it's in a trade, hit its first take profit. We just had another trade too, by the way. We had 2 here. You should have gotten in on here, on this one all the way down here, which was a nice trade to get into. Went against us about 6 pips or so. And then you can see that it takes off and goes 73 pips, hit its first take profit, and would have been in the market at 53 pips. Now, we didn't get that one. So if you missed that first one, because of the kind of movement we had, you actually got a second opportunity here on the ATR sniper, and it was right here. And you can see that we jumped in at 1.3531, and you can see here that price moved nicely up to a maximum favorable excursion, about 55 pips. We took our first take profit. We are at break even right now, so if the market continues to move up, we'll be very happy campers. Okay. New version of the sniper is not in the folder yet. I'm going to get that to you. BW people, prep for it. It's coming. BW is going to be. We're just making sure everything's in line here. And now I think we're going to be ready to rock. I mean, we had a breakout here, but the breakout's definitely not over. And we've been taking it slow to make sure that everything is in line. We've got a lot of money being traded in BW, and we want to make sure that we don't have the same trade and see issues that we had last year with trade and see. And so we have our own different deal completely going on. It looks like it's working very well. So we want to make sure everything's doing what it's supposed to do before we go into our more aggressive mode. And so I think we're ready for that. So that's where we're at. BW is actually, we had a trade on the euro dollar, and that would have been the only on the euro dollar here, and that's what you'll find in the STP. The STP is also running on this new platform, and it should be working. So those people who are in the STP should potentially be up. I know that we started down about 2.5 on that account. And now we're currently up about 2%, 1.5 to 2%, so overall gain of 4% on this trade thus far. Thanks, Dick, about that. We're going to need some testers for the new Tradematic. Okay, it's a great product. It's going to be amazing. It's just a completely different animal, but we need some testers. So if you're interested in testing the Tradematic, if you'd send us a message, we would appreciate it. And I'll take a small group of testers out to play with this thing. What's new and different about the Tradematic? It's completely different. It's a completely different animal. I can't even begin to tell you how different it is. It's much more robust. It can take high frequency trades. The trades are taking in a matter of a second. You can take trades across multiple terminals. You can run them from off the chart on MT4. I mean, it's just amazing, honestly. It still has some work to go, but it's definitely a different animal. It's just a great trade. I'll show it to you guys one day, very soon. And that's really what you want. You want to have. You have lopsided trades because we're using 90% Trump percent daily. And with the getting back to the Tradematic, one of the things that we want is that we wanted it to, we really needed it to be able to get into trades very, very quickly for clients, and it now has the robustness, the ability to do so. And so that's that. I think you guys are gonna really love it. Okay. So that's, I'll get back to that and I'll talk about it in a bit. It does an awful lot of stuff. It's going to automate all of your all of your mechanical trades, all of your manual trades. And that was the whole purpose. So anyway, we're up about 1% on this ATR thus far, and that was the ATR that was taken with us. Okay, so we also got into a nice triple threat 3. You can see the triple threat 3 where it jumped in here, jumped into a trade at 134.95. Double triple threats here. Nice small risk on the trade here, and a nice big pop up, 66 pips. Maximum favorable excursion of 91 pips. And it's closed the first take profit. So if we do have price movement to the upside, the good thing about this particular trade is that it has a buffer space. So if we don't have a retracement, a major retracement in the market, we've got some space. We've got a 50 pips space to play with here. Price goes sideways and then moves back up. Then we could see this 18 pip trade with this massive lot size you can see here continue to make its way to the upside. And I hope it goes straight up and doesn't turn back around, if you ask me, so that we can get some more out of this triple threat 3X, and it'll recover prior losses that we had 2 back-to-back double hits here, stop and reverse, And so, you know, I hope it goes to the hilt, continues to move to the upside there. All right, guys, that's pretty much it. That's pretty much it. So to recap here, our ATR Sniper is currently up about 60 pips. Our Triple Threat 3X is currently up 70 pips. Going to our other stuff, our Quattro is up 200 pips, 200 plus pips. The 270 pips. The only one I didn't talk about was the IBO. Sorry about that. So let's talk about the IBO really quickly. The 3-bar IBO does not give us a buy signal. We have another one, 1, 2, 3. This one does give us a buy signal right here. This is a reversal candle. Remember this? This was our entry, 50 pips of risk on our IBO Rev candles. Takes you up 124 pips. Is currently in the market 107 pips. So 2-to-1 ratio as far as profit is concerned on that IBO Rev. So once again, the IBO Rev is doing extraordinarily well. That's what we wanted to see. 2-to-1 ratio. Use 90% trend percent. Basically, you're up 4.5% on this trade thus far, and we can see it go. You know, like I said, I'd like to see it continue to move forward. And of course, this trade gets in at 134.57. So that was the high. 134.60 would have been the entry, and then we're at 135.64. So about 104 pips of profit there. So across the board, all the FxEdge line is running, and that's how it is. You know, that's how it is sometimes. All right. So the euro dollar daily, once again, guys, is up. Currently 190 pips. Dollar Swiss discretionary trade that we called earlier this week. It's currently up about 240 pips. Pound dollar sell changed from green to red. Potentially up right now about 200 pips. Pound yen closed out at break even. Aussie dollars closed is not giving us an entry, and you can see our euro yen here is up 268 pips, and that we took that manually actually right here in the trade room. And that pretty much that's all folks. That's pretty much everything for the day. You know, I'm very thankful for the moves that we've had. I'm hoping that we do have continual movement to the upside, you know, we'll have to wait and see what the market decides to do there. Thanks, Mike. Appreciate that. BW has one trade open. No, it doesn't. The STP5 does currently have, as far as I know. We have a daily meeting about it. I don't think we're currently in one. All right, guys, that's it. Look forward to talking to you tomorrow. Same time, same place. 5 p.m. Eastern Standard Time, Monday through Thursday, for another edition of the FxEdge Power Hour. See you tomorrow. All the best. Bye-bye.